Hey, what's up, guys, and welcome to Optical Capital. As I always say, this is where we envision the price movement before the move occurs. Okay, so guys, in today's tutorial, I'm going to share with you some of the strategies that I use to open position, or some of the things that I do before I open a position. Okay, whether I'm trading synthetic indices or whether I'm trading currencies, this is what I do first. Okay, so you must know the price in an uptrend. Say this is an uptrend, it won't move like this. The price will go up, creating wave 1, then go down wave 2, wave 3, then go down, creating wave 4, then go up again. Okay, so this will be 1, this will be 2, and this will be 3, and then this will be wave 4. This is wave 4, then this is wave 5. Okay, so you might find that in wave 1, in this wave, you also have something like this. Okay, in this wave 1, you have something like this. In wave 2, you have something like this. Okay, and then in this wave again, you have very small waves like this. So this is how the price moves depending on your time frame. Okay, this is how the price moves, whether it's an uptrend or a downtrend. This is how the price moves. So in this case, if you are on this trend, what will be the best area to buy, and what will be your reasons? This will be the best place to buy. Okay, this will be the best area to buy, and when the price breaks this structure, this will be another best place to buy. Okay, and where and here, this will be the best place to buy. But if you are shorting, where will be the best place to buy? On this resistance here. At this resistance, it will be your best place to buy, your best place to sell. I mean, not to buy, to sell. Okay, to sell. At this resistance, at the end of wave 1, this will be the best place to sell. And at the end of wave 3, this will be the best place to sell. Okay, and the best place to buy will be at the end of wave 2 and at the end of wave 4, or at the break of this structure. At the break of this will be another the best place to buy. Okay, so let me show you what I'm talking about on a chart. Okay, how would you know that the price is going to bounce back, or it's going to bounce off here? How do you know that? You are using a Fibonacci tool. You are going to plot a Fibonacci tool from here up to here. Then the Fibonacci tool is going to give you the percentages which are your support and resistance. Okay, where the price might bounce off. And if this zone is corresponding to any of the Fibonacci levels, you will have a better confirmation that, oh, maybe the price might bounce off here. But we are also going to use other things like reversal patterns, not reversal patterns, continuation patterns. Okay, continuation patterns like a flag pattern, wedge, and so forth. Okay, and also you have to observe the candlesticks that are forming when the price get to this Fibonacci levels. Okay, let's go to a chart. I'll show you what I'm talking about. Okay, so there's this chart. This is Euro USD JPY. This was 28 April. Okay, this was 3 weeks back. If I was on this chart, what will be the first thing that I do? The first thing that I'll do, I'm going to mark this. This will be my what? This is going to be my support zone. Okay, remember, support and resistance are not a single line like this. Okay, then I can see, oh, I have another support here, then I have another support here, and I have another support down here. If I wanted to buy this, the best areas or the best places to enter, it was going to be here, to buy here, and buy here. So as I was saying, to know where the price is going to bounce off, you'll have to use Fibonacci tool. Okay, so let's pretend that the price is up here and making this pullback. You are going to plot your Fibonacci like this, you see, up to here. Then you are waiting for the price to come and bounce off between any of these zones. Where did this price bounce off? It bounced off at this zone, you see, 78.6. As I was saying, this support and resistance is not a single line like this, it's a zone like this. So this zone where the price bounced off, it's level 78.6 of the Fibonacci. Okay, even if you drag this up to here, you see the price bounced off where? Between 38.2 and 50%, you see. And in this scenario, the price bounced off where? At level 38.2. okay, so what am I going to do next? After I do this, let's delete this thing. Okay, so I'll have to come back here and look for the last level where the price started to change direction. Where's the last level the price started to change direction? The last time the price was on an uptrend, then started to go on a downtrend, it's here at this zone. You see this level? Let me do this. I'm going to do this. Okay, this is going to be my what? This is going to be my support, I mean my resistance. Okay, I have my support here and this is my resistance. And what is the expectation? The expectation is that when the price get to this resistance, it needs to either get rejected, break this resistance, retest, and go up. Okay, this is going to be my resistance. I'll have them like this. Okay, so let's play this and see how the price rolled out. Okay, the price goes up, the price goes up. Now the price is approaching our what? Our resistance zone. When it gets to the zone, what are we looking for? We are looking for reversal candlesticks. Okay, we are looking for candlesticks that will show reversal. The bearish reversal candlesticks, it's what we'll be looking for here. If it happens that the price breaks off this, it breaks this resistance and go up, what we'll be looking for? We'll be waiting for a retest before the price continue to go up. Okay, let's see how this thing rolls out. Rejection. You see, the price got rejected here. Okay, but this candlestick is not a definite confirmation, but this one is a definite confirmation. So if you are going to short this, you are going to do this. Okay, you are going to enter on this candle. You are going to, then you are going to put your stop loss just above here. Oh, wait, let me. Okay, like this. And this was going to be your risk to reward. It was going to be like this. Okay, this was going to be your risk to reward ratio. Okay, now if you are on this and your target is twice this, or let me just pull it down to just above your last level of support. Okay, this was going to be your take profit and this was going to be your risk. Okay, so now let's play this and see what the price will do. Okay, the price goes down, the price goes down, the price goes down, the price hit your take profit. You see here, the price hit your take profit. Why did you put, or why are we putting our take profit at this level, not at this zone? Because the price can bounce off before getting to this level. Okay, that's why we are putting our take profit just above the zone. Let me remove this tool now. What are we doing now? We have hit our take profit. What is the expectation? The expectation is the price to get rejected here Or for the price to break off this, then do what? Then retest this, then continue going down. Break off this support zone, retest the zone, then continue to head down. Or to get to this zone and do what? And then gets rejected and go up. Okay, so we are not using any indicators, we are just observing the formation of the candlesticks. Okay, here we're observing what? We're observing the bearish reversal candlesticks. Okay, and in this case we'll be observing what? The bullish reversal candlesticks. We need to see rejection of this zone. The price can come to this zone, test this zone. A wick can even pierce through this zone, but I don't want to see a wick closing below this zone. If a wick closes below this zone, I will say, okay, now I no longer have this zone. This support zone is no longer valid. It has been invalidated if the wick closes below. But if I meant if the body closes below, it will invalidate this support. But a wick can pierce through this zone, and the body must close within the zone or above the zone. Okay, if I get that, I'll say, okay, I still have a valid support zone. Let's play this and see what happens. Okay, so this candle shows rejection of lower prices. The price touched our zone and got rejected. Okay, let's play this and see. So when the price does this, this is what I'll do now. I'll have to draw my other support. Okay, because this price touched here, I need to draw another support. And by doing that, and by drawing support, what do? I go to where the candle closed, and I go to where the wick ended. Okay, or the last level the wick touched, like this. Okay, my wick at some point was this low, the price at some point was this low, and ended up closing above here. So where the body closed and where the wick was once at, that's how I draw my support and resistance. Okay, so let's play this and see how the price rolls out. Okay, the price is going up, the price is going up, the price is coming down. Now once this price start to come down, what do I expect, ladies and gentlemen? If the candlesticks are like this on 4 hour, I will be expecting double bottom to be formed at this zone. Okay, I'll be expecting a double bottom, and double bottom is a what? It's a bullish reversal chart pattern. Okay, so let's see what this price do. You see, this area, this candlestick is also a rejection of lower prices. See, the price came here and touched this and then started to go up. If I want to trade this, I'm going to enter where? At this candlestick. At this candlestick is where I'm going to put my long position, somewhere here. I'm going to do something like this. Oh, excuse me, sorry about that. I didn't see that is not a long position too. So I'm going to do this at this candlestick. Okay, and this will be my take profit. My take profit is just going to be below this resistance zone, and my stop loss is going to be where? Is going to be below this, the last area to be rejected, just below my support. Okay, I'm going to have something like this. You see, then the price start to go up, go up, go up. And when the price does this, what will I be doing? My trailing stop will be on. Okay, my trailing stop will be on. This will keep moving automatically on its own. Okay, and when the price does this, by the time the price starts to touch my take profit, my stop loss will be way above my entry. Okay, my stop loss will be way above my entry. You see, now I've hit my take profit. Let's stop this first. Let's stop this here. I've hit my take profit. Okay, what do? Let me remove this. I had this zone before. Okay, this was my what? This was my resistance zone before, right? And what happened? This zone was broken. You see, this zone was broken. And when the zone is broken, what happens? When the resistance or support zone gets broken, what happens? We expect that the price to come and retest that zone. If the zone is strong enough, it will withstand, okay? Then this price will continue to go up. If this zone is not strong, this price is going to break off this, retest again, then continue to go down. Let's see what happens, okay? Remember, I don't want to see a candle body closing below this resistance zone, which is now tending to support, okay? I don't want to see that. So this is where the price is currently at, okay? 22 May 2023. This is where the price is currently at. So if this price is going to go up, as I hope or as I envision, my entry is going to be somewhere here. Once this price starts to leave this resistance zone, that's when I'm going to place my entry. And what will be my target? My target now, this is what I'll do. Let me show you again. Let's reverse this and I show you where I will place my next entry. I'll have to zoom this. I'll have to zoom this out, okay, so that you guys can see clearly how I place my entries, okay? So I'll have this Fibonacci tool from here, the last level where the price was at, and I'm going to place this here. You see, now my take profit is going to be just at this zone, just below this 50% zone, or way up here at 61.8%. If this price was to go up, that's how I'm going to place my take profit, okay? This zone is a major resistance, okay? And this zone is also a major resistance. So the zone where the price is at right now, let me put a very long horizontal line to show you how many times this level was tested. You see, this level was tested once, twice, 3, 4, 5, 6, 7. This level has been tested many times. So for an area to say it's a major support or major resistance, we need to see more than one touch, okay? So this is how I will place my entries, okay? This is how I'll place my entries. The price is currently here, okay? If it happens that this price breaks this zone and go down, that's when I'm going to look for retest of this. Then I'm going to short this after the confirmation of, or after the rejection of the retest, okay? Right now, what am I getting? I'm getting this rejection, okay? I'm getting rejection of this zone, okay? So this is where I'll be looking to go long, okay? This is where I'll be looking to go long on this, because the price has done what? Has rejected that level, okay? This is what I'll do. I'll come here, take my position tool and place it here, and then my stop loss is just going to be below this candlestick wicks, okay? Just below this candlestick wicks, okay? Then where will be my take profit? My take profit 1, my take profit 1 is just going to be below here. This will be my TP1. This is like risk of 1:1, okay? Then I will see what the price do when it gets to this zone. Remember, this is the 50% Fibonacci level, okay? Then this will be my take profit 1. Then if this level gets broken 2, this will be my take profit 2, somewhere here. This will be my take profit 2. But I'll be observing how the price reacted to these zones, okay? I'll be observing how the price reacts when it gets to this zone. So I'm not using any indicator, just a simple pure price action using support and resistance. I'll see you in the next tutorial, guys. Please click the like button, subscribe to the channel, comment below if you didn't understand, or you can contact me privately on WhatsApp or on my email, and I'll explain everything for you further. Okay, if you don't understand anything, please comment below, tell me what you didn't understand. I will explain it for you. Thank you for your time, guys. Thank you for watching, and I'll see you in the next tutorial. Please subscribe to the channel. Okay.